You've been leaving money on the table, and the worst part is, you probably already know it. Today, we're talking about one of the most uncomfortable conversations in business: asking for more money without watching your client walk out the door. Here's the thing, the fear of losing a client is so powerful that most people never even try to raise their rates. And that fear, ironically, is exactly what keeps them underpaid for years. We've all been there, refreshing our inbox after sending that dreaded email, wondering if we just torched a relationship we spent months building. The catalyst behind all of this is actually pretty simple. Your rates when you started were survival pricing, not value pricing. You were essentially running a clearance sale on your own expertise. And at some point the market moved on, but your invoice didn't. Think of it like a restaurant that's been charging $19.99 for a steak dinner since 2008. Eventually, the cost of the beef, the rent, and the chef's salary make that price a slow bleed. The menu has to change, and your rate card is your menu. What's wild is that just a few years ago, freelancers and contractors were being told that the gig economy was liberation, be your own boss, set your own price, work in your pajamas. Now those same people are realizing that set your own price only works if you actually have the courage to reset it. Psychologically, raising rates feels like betrayal, like you're breaking some unspoken contract with a client who trusted you. But here's what behavioral economists will tell you. People associate price with quality, and keeping your rates artificially low can actually erode the very trust you're trying to protect. History shows us that every professional industry goes through these uncomfortable recalibrations. Lawyers raise their rates, doctors did it, even your barber has done it at least twice since the pandemic. The pattern is always the same. Anxiety before the ask, awkward silence during, and then more often than not, the client just says, okay. One study found that over 60% of freelancers who raised their rates kept all or most of their clients, and yet the majority still wait an average of 3 years between increases. That gap between data and behavior is where your money is hiding. Now let's kill the biggest misconception right now. Raising your rates does not mean you're greedy. It means you're running a business. If your client is profitable because of your work, they have every incentive to keep you, even at a higher price. The script that actually works goes something like this. I've genuinely valued working together, and because I want to keep delivering at the level you expect, I'll be moving to a new rate of X starting on this date. Short, warm, non-negotiable in tone, and notice what's missing in apology. The practical lesson from every professional who has navigated this is that you anchor the rate increase to value delivered, not to your personal expenses or inflation, because your client doesn't care about your rent, they care about their results. And when you frame it that way, the conversation shifts from why should I pay more to can I afford to lose this? Position sizing matters here, just like it does in investing. Don't raise rates on your biggest, most volatile client first. Start with someone mid-tier, where the relationship is solid and the risk is lower. Build your confidence muscle before you walk into the heavyweight bout. At the end of the day, the discipline of holding your rate, not caving the moment someone pushes back, is the skill that separates the professionals who thrive from the ones who stay stuck. Consistency in your pricing sends a signal. This person knows their worth, and so should you. The irony is that the clients who respect you most will rarely even flinch. And the ones who lose their minds over a 10 or 15% increase were probably undervaluing you from the start. Either way, you end up with a better business, whether they stay or go. And if you're building something bigger, whether that's real estate investing, contracting work, or finding the right lenders to scale, check out our links in the description below, because we can help you get started.